Hello, welcome. So, been asked to do a talk on a career in corporate finance here at DTE Business Advisors. I think we're aiming for about half an hour, so we might get through that, we might not, but we'll wait and see. What I'm going to talk to you about is kind of my background in how I've ended up in corporate finance, a bit about DTE as a whole, as a firm, specifically the kind of tasks that we do at DTE Corporate Finance and recent jobs that link into that. And then we've also been sent through some questions. I've got 6 questions that have been sent through before the webinar. So I'll cover those off at the end. And then obviously if there's any more questions that anyone thinks of, well, if they're listening, my contact details here now that are on the screen. Just send me an email or ring the office. You can ask any questions you want. We can run through it. That's fine. So, yeah, hello. So Lewis Pearson. I've been with DTE for coming up to 7 years now in August. So I've been there quite a while, as you can tell. I didn't go to university. I know this is aimed at first and second year accounting and finance students. I came straight as a school leaver to start at DTE. So my kind of route to becoming a chartered accountant was 23 exams, 13 doing the AAT, which is kind of an apprenticeship in a way, up to level 4. And then I did my ACA. So because of doing the AAT, I got a few exemptions. I only had to do 10 at the ACA. I know for you, if the ACA is something that you're interested in doing, and I'll touch on this a bit later, it would be 15 exams, subject to any exemptions you may have, which is fine. In terms of corporate finance, well, I started DT in the audit and accounts team. That spent 5 years there in our Bury office, and then moved into the corporate finance office in Manchester in August 2018. So again, coming up to 2 years in corporate finance now. So in terms of DTE, just to quickly touch on kind of a background as to who we are and what we do. The main office, kind of the head office you'd call it, is based in Bury. That would house the audit, business advisory, financial planning, forensic accounting, IT tax services, corporate finance and valuations. They're kind of based more in the Manchester office. As a firm, we've probably got close to about 100 staff, which obviously is a reasonable size firm. I believe we're kind of one of the biggest in Bury. In Manchester, there's 6 of us, and so corporate finance team, in terms of the scale of the whole firm, relatively small. That's not unnormal, would you say, for a corporate finance team? You'd call us kind of a boutique firm where less than 10 staff, not out of the ordinary. Obviously, we're an ICAW training firm. We've got lots of students who study. Probably, I'd guess, the majority of the audit and business advisory team are studying at any one time. So 15 to 16 people doing their exams, all different stages. And then we're also the member of kind of an international accounting group called TIAG. Good for a kind of any international transactions that we work on, and then good for opportunities for staff. We have had people that have moved to Australia in the past, which has been obviously interesting and helpful for them. I won't go over kind of each service in too much detail. I know this is all about a career in corporate finance, but the ones that might be helpful, especially audit and business advisory, more because people that start their career in corporate finance people that end up in corporate finance would start their career within audit or business advisory. It is kind of, it's a good kind of grounding, a good learning curve to kind of how you put a set of accounts together, accounting policies, and insight into different businesses. That gives people a lot of good background as to the knowledge that you would need to hopefully take that further in corporate finance. It's all just different skills that you would relay across. But while you're studying, there's a lot more practical experience you'd gain in audit and business advisory that you will learn within your exams. So different kind of, you do audit and assurance modules. That's obviously closely linked to doing the audit and corporate reporting, kind of how different accounting transactions you take those, how you'd account for those. So by doing that on a day-to-day basis in your job, obviously gives you a better grounding for those studies. So in terms of corporate finance, as I say, there's 6 of us in Manchester, so you might see that as quite a small team, but it isn't kind of in the terms of the big 4 kind of teams. They might have, say, 20 people. They're not kind of hundreds of people of teams, so we're not kind of small in terms of the scale in that sense. Where we are different at DT is that not one person kind of specialises in a specific area. So all these services that you can see there as to what we advise on and the different kind of jobs that we do, in a kind of a bigger firm, you would specifically work in each one of these areas. Your job would solely be due diligence, transaction services. You would maybe be doing mergers and acquisitions, just financing, just debt investment, just equity investment. They are much more kind of tailored and specific in their teams, whereas with the 6 of us, we kind of cross over into all different areas, help out as and when we can, and you get a kind of a lot more broader range of experience. I suppose some people might see it as a stepping stone. You can decide which area you think you prefer the most and then move on. That's fine, that's kind of natural. Obviously that's not kind of the idea for the firm, but people will do that. So in terms of each of these specific areas that we work on, I'll just go over each one as to kind of a recent transaction that I've worked on as to what my role was, to give you a bit of an insight into what the kind of work you could expect if you did fancy a career in corporate finance. So modelling, that is all kind of, we help clients in building financial models, which is kind of, they're integrated. It's a profit and loss account, a balance sheet, a cash flow statement. It can run for 6 months, 12 months, 5 years. It's all in Excel. So kind of, we've got a few questions at the end as to what you need to, how you can promote yourself. But it's kind of, your Excel knowledge is quite big, especially for us in terms of building these models. Some other firms might have software that they use, but we've tried different softwares. They're never kind of worth the expense. You can pretty much do what you need to do in Excel if you've got a good sound knowledge. So it's dealing with different formulas, dealing with how to link things in, because what we'd do is we'd have a set of assumptions that ideally you will be able to flex. So depending on if someone sells, let's say the recent job I'm working on, it's kind of a beauty firm. They're selling lip balms, face masks, face creams. We need to flex kind of how many units of lip balms or face masks they might be selling in each year. And I might suggest it might be 1,000 units a month, and someone might disagree and say it's 500 units. You just want to be able to change one little cell in that spreadsheet to flow across the rest. You don't want to have to be amending thousands and thousands of cells to change 1,000 to 500 units. So that's kind of where your Excel knowledge comes in. It's kind of, from an accounting sense, it's how you deal with understanding how a profit and loss, balance sheet and cash flow links together. How the revenue turns into debtors, how that then impacts on your cash. You've got kind of the VAT impact, if it's VAT registered, similar on your purchases and your trade creditors. And then you've also got your salary costs, your PAYE creditors, all this kind of background that you understand and you learn from both your studies and from auditing accounts. Then you obviously helps apply that knowledge into how you build a financial model for a client, and you include all the costs that they should include. So yeah, so kind of touching on that, the recent one we've been doing, and it links into equity investment, is we've got a client who is a startup in kind of the beauty industry that are looking for equity investment, and our role is to obviously help find that investment. So we obviously have contacts that we would need to speak to and present to them, but before we can do it, we need to know how much money they would need, what the valuation of the business currently is, so what percentage it's reasonable for them to give away. So we're kind of building a model for the next 5 years, and we're challenging our client on their assumptions as to how many units they can sell, to see how much profit, how much revenue the business will make, and how going forward, what level of cash investment they need to achieve that revenue. Kind of breaking into America, breaking into different countries, all cost money. You've got to kind of take those into account. So that's kind of there's the modelling kind of area. Acquisitions and disposals. The current kind of acquisition work we've got on, or I'm dealing with, is we've got it's kind of having acquisitive clients who want to buy businesses in their sector or different sectors. They might kind of just be looking for more market share. They might be looking to buy the supplier or buy a customer, kind of integration vertically or downward. So we've got a couple of clients that are actively seeking acquisitions, and we're there to help them find those. So company searches, keeping your eye out for. There's obviously like databases where people list businesses that are for sale, and just matching opportunities to them, and then we help them through obtaining more information, which kind of links into other areas that we'll cover on, but the due diligence, the valuation of that business. And then in terms of disposals, obviously shareholders that want to exit the business, whether that's kind of partial exits or a complete disposal, we're tasked with presenting a document that summarises the business, obviously in its best light. So how profitable it is, why it's different, why it stands out in their sector, what kind of value added they have or unique selling points that's attributable to them. So it's important kind of for us to understand the sector and what buyers would be looking for to show that business in the best light. And then we're obviously tasked with finding a buyer. So it's kind of the contacts that you build up and sending it round to people, hearing, kind of having that database of acquisitive companies. So we could end up with a company that we know are looking for acquisitions, and we are tasked with selling a company. So it's quite an easy match and it can work well. So, but kind of finding a buyer can be quite difficult. As you can imagine, coronavirus, not a lot of people are wanting to spend big money at the minute. That kind of area of work has quietened down quite significantly because people are looking internally at their own businesses rather than externally and buying businesses, which makes complete sense. So yeah, it might be difficult over the next 12 to 18 months for businesses in particular to find buyers, but there could also be big opportunities for not necessarily cheap deals, but deals out there for distressed businesses that have come into trouble because of coronavirus. So I'm sure we'll see. And then MBO, MBI, that stands for management buyouts and management buy-ins. So that's where you've got your business, the shareholders again might want to exit, and the management team below them would like to buy those shareholders out, or an external management team would like to buy into that business and buy the shareholders out again. So similar to disposals, but sometimes a bit more not necessarily conflict, but they kind of each party knows each other. So it can be you've kind of already maybe got a willing buyer or a willing seller, and it's more to do with kind of managing the expectations of each side, helping them form a valuation of the business, and kind of assign roles moving forward for how they can manage that business into the future. The fundraising and refinancing, that is obviously during coronavirus, we've been doing a lot of work in this area. We are seeing clients that not necessarily struggling for cash, but may end up struggling for cash in the future. Obviously, trading's down, the market's down. So there's the coronavirus business interruption loans. We're helping a lot of clients with raising money on these loans. So our job is to kind of prepare a document that sets out that business and send it to their bank with kind of the financial performance over the last 3 years, their current balance sheet, so what cash they have, what debt they have, how the working capital looks, and then a bit of an overview on the business. And then we're helping with cash flow forecasts, kind of in linking back to the modelling point. What will the cash do over the next 12 to 18 months, and how much money does this business need to raise? So then that's how we get to the point that we present it to the bank. But then our job is kind of negotiating with the bank. Do we think the interest rate is fair? What security do the bank have? What have they asked for? Is that fair? What are the covenants? Obviously the bank are taking covenants over what the business earns against kind of their earnings, we call it, but it's more kind of EBITDA, which I assume you might be aware of, but earnings before interest, tax, depreciation, amortization, less the drawings of kind of the directors of dividends, would leave you with an earnings figure. That kind of needs to be 1 times, 2 times the debt repayments, normally 2 times. So it's kind of negotiating around that. Sometimes we've seen higher multiples that the banks require. That might necessarily show that they think the business is a bit more risky than other businesses. It's kind of our judgment as to whether it is fair and whether it's workable for the client to borrow that money and be able to repay it. So then due diligence, that's kind of been a key area for us over the last kind of 12 to 18 months. We do a lot of due diligence for private equity firms, banks, trade buyers who are either looking to put debt into a business. Say in our kind of, I suppose I've not really touched on it yet, the kind of standard transaction size at DTE, there isn't really a low point, but up to say 20, 25 million, that's our kind of range of deal sizes. So a bank might be wanting to put 4 or 5 million into a business. We are tasked with doing a due diligence to make sure that they are earning what they say they are, the profit and loss account makes sense, the accounting policies, which again kind of links back to any knowledge that you may have learned in your previous kind of role in advisory and audit. You understand the accounting policies. There's no surprises in the balance sheet, so there's no hidden liabilities or there's no big debts that aren't showing in the kind of accounts that are presented at Companies House, but a more detailed look would highlight that. And then again, looking through the forecast, so where we do the modelling for people, we also interrogate the models and challenge people's assumptions. So is it reasonable that they would grow by this amount, or they would save costs in this area? Do we buy into that? There's all different types of due diligence that is undertaken. Ours is kind of financial due diligence, but in kind of, especially in private equity transactions, they'll have tax due diligence, they'll have legal due diligence, commercial due diligence, management due diligence, all kind of before they part with the money into this business. So sometimes we do touch on the commercial side, so what makes this business kind of different to everyone else? Why are they different in the market? What opportunities have they got? So a bit of kind of research into the sector that we get an insight into as to where they see it heading and then where other people see it heading. So quite an interesting, you do build up quite a lot of knowledge of a sector quite quickly when you're doing those sort of areas. The equity investment side, kind of touched on that briefly with the job we're kind of working on. So the business is looking for equity investment, and we are tasked with helping them kind of achieve that investment. So as you can tell from the due diligence work we do with the private equity people, they're our first kind of port of call that we'd ask if they're interested, what they might be looking for. It can be quite an open conversation. They'll let us know why it's not for them, what doesn't work, and then we know for next time if we present it to someone else, where we might need to change it, how we might need to reword our approach as to why this is a good business. And then restructure, kind of similar, so the fundraising and refinancing. It's kind of businesses looking internally as to how they need to kind of, maybe they have different strands of revenue. One's a lot more profitable than the other, but they just don't have the systems in place to kind of establish that, and they're not concentrating enough on that area. We'd be tasked with kind of going through that with the business, going through creating business plans as to how they can concentrate on more profitable areas of the business, or why the margins may be lower. Is it kind of the cost price of people not as efficient as they should be? Can we kind of, how do we prove that? What calculations can we do and present to management to show that? So it's all kind of getting underneath into the business to see where improvements can be made. And then valuations, the last kind of point on this slide is kind of tasked in different ways to look at valuations. It can be somebody wanting to buy their partner out of the business, kind of two shareholders, one wants to leave, people wanting to sell the business, or people wanting to buy a business and want to know how much we think it'd be valued at. So the standard kind of valuation method that is used is a kind of an EBITDA multiple, which can depend on the sector, the size of the business, whether it's kind of a growing business or not. But we also kind of deal with listed company comparables, kind of discounted cash flows. So that kind of, again, links into the modeling, links into how you understand the business, and also the knowledge of what businesses have sold for different prices in that sector to understand what would be a reasonable multiple to attach to that specific business we are looking at. So we've got a short video here from one of our trainees who joined recently, just about their career, how they found life at DTE in general.
I'm Elliot. I started working at DTE in September last year, having graduated from the University of Manchester with a degree in maths. I applied for the job at DTE through the careers service at the University of Manchester. After applying, I attended the open day here at DTE. It was really helpful for me to experience the kind of working environment that I would be working in if I was successful in getting the role. Working here, I get to take part in a lot of different job roles, including accounts preparation, audit work, management accounting, bookkeeping, as well as getting the opportunity to work with our corporate finance team in the Manchester office. For me, that means that I get to experience a lot more different sides to accounting that maybe I wouldn't get to experience with a different company. As part of my training contract, I get plenty of time out of the office to go to college and to revise, study for my ACA exams. We also have a dedicated training manager here, which is really helpful for me because there's someone with real life experience as an accountant who can help me through my training contract. But equally, all of my colleagues would be happy to help if I had any queries with regards to my college work and my studies. So yeah, I'm 4 months into my time here and thoroughly enjoying my time at DTE.
So a short video there from Elliot about his time at DTE. Just before, so then the last slide is questions that were asked before the webinar from students. So the first one, different house corporate finance, different working from other areas of finance. I think it's kind of the variety of work that we do in corporate finance and the different projects. So in terms of the other areas of finance, if I assume that's kind of other areas of accounting in general, kind of audit and accounts, what you can find with, or what I've found with audit and accounts is, it's kind of, you're doing accounts year in, year out, you can end up kind of with the same clients, you can end up with the same audits, and the numbers will be different each year, but kind of the processes are the same. Even the audit processes on different clients are all, it's a similar sort of process that you'll be going through. Whereas corporate finance, it's a lot more project work, it's kind of 1 week projects, monthly projects, but once that's done, it might be the end of the time that you kind of, that's the one and only time you'll speak to that client or that sector, and then you're onto something new. We do obviously try and keep relationships with the clients we've worked with. It's not kind of as black and white as there's the month when not going to speak to each other ever again, but it's the different kind of workload that you go through, which is why it's quite different. It's kind of more interesting from my perspective of keeping that variety of work and variety of tasks that we can do. What attracted me to work in corporate finance, probably kind of covered that in the first point. The variety of the projects and the different work. I think the size of the clients here, especially at DTE, these are people who are selling their business that they have built their business up over kind of their lifetime, and it's obviously a once in a lifetime event for them to be selling the business. They're a lot more kind of personally attached to you and how you can help them, especially in terms of selling their business, and kind of in a way that is their retirement fund, whatever that business is sold for. And you do build up kind of a lot more of a relationship, I find, with the clients in that way. Sometimes kind of accounts and audit can be seen as a bit of a burden. It can be seen as you're a bit of a pain. You're asking questions, whereas if you're asking questions to help someone sell the business, they might get £10 million at the end of it. They're a lot more likely to answer your questions and want to go out for a beer with you after, rather than thinking you're a pain. So how can you develop your commercial awareness for a role in corporate finance? What we tend to do, especially here in Manchester, we're all subscribed to different newsletters, kind of business news, different areas, different kind of magazines that offer it. Kind of every morning we're getting in, we're reading it, we're seeing what's happening. Like I said before, who's acquisitive, who's lending money, who's kind of what businesses are going for sale, is it in any specific sector. So keeping up with the news and what's going on in different markets will definitely help you. If you're interested in specific sectors kind of the market, different types of businesses, try and get a kind of awareness as to what makes good businesses in those markets stand out, what are their kind of unique selling points. It's kind of understanding a lot of what we do in corporate finance is understanding the drivers behind the business, what kind of makes them stand out. Why are they better than everyone else? Is it kind of the marketing? Is it the product? Is it the price? It could be kind of if it's a service, is it that they have the best people, or is it that they have good people but at a cheap price? Kind of the balance there. I think I have done one of these kind of talks last year at Lancaster Uni, and I know you have a kind of investment committee. So obviously, if you're part of the investment committee, you're naturally going to increase your commercial awareness from doing something along those lines. But just kind of get involved outside of kind of reading articles. It's all about kind of putting stuff into practice. So obviously, the work experience, the placements, which I'll come on to, are all going to help you in terms of applying for jobs in the future. So skills and experience looking for in addition to an accounting and finance degree. I know this webinar is kind of targeted at accounting and finance students, but kind of is at our firm in particular, it's not kind of only accounting and finance graduates that work there. Kind of one of the partners has a geography degree, so it's kind of a broad range. When we interview people, what we kind of look for is it's not just kind of having a 2-1 or having a first in the degree and having good A levels. It's kind of, are they personable? They've got to be approaching clients, asking questions, dealing with clients directly, and you're kind of taking on your DTE in that sense. When you're asking those questions, you're representing DTE. So we want people that can ask the questions, can get on with clients and build relationships there. Kind of an inquisitive mind is obviously always what you're kind of looking for in accounting. Not that we want to find problems, but you want to know if something is wrong, that you would find it and you would know what is there. Yeah, I think what we tend to see is when we interview a lot of people is they might kind of say they have an interest in maths and business. You kind of need to look past having an interest in maths and business and why necessarily you are interested in accounting and finance and why you want to work for that firm in particular. I know kind of from experience myself, a lot of firms are doing kind of psychometric tests now, and then which will kind of test your knowledge and test whether you are capable. And then after that in the interview, it's a lot more about you and how you come across as opposed to kind of your knowledge and what you've learned at university. Training and qualifications. So like I say, I did the AET at DTE, so we do still offer that. But for you, as kind of a university graduate, we do the ACA. We don't tend to do the ACCA or any other. We're an ICAW training firm, so we would stick with the ACA. We kind of in tax as well. We support people doing the chartered tax exams. I'm looking potentially at doing my ICAW, doing corporate finance qualification, so I'd be supported in that as well. That might be something that if you are looking to get straight into corporate finance and not do your ACA, you could explore kind of that route into corporate finance. But the standard for the firm is kind of the ACA, which I'm sure you're aware is kind of 3 levels, 6 at the certificate, 6 at the professional, 3 at the advanced. Usually takes 3 years. That's kind of how the exams are spread. But what we do see is kind of, especially for you in accounting and finance students, you would probably get a lot of exemptions from your exams. It's not always recommended that you do take the exemptions. You're gonna have to get 3 years work experience anyway to become kind of ACA qualified. That is what you need. So kind of sometimes if you've got an exemption from something that you learn in the first year, it's not exactly a bad thing to do the course, which is obviously paid for by the firm, give you a chance to go to college and then kind of refresh your memory and then keep it fresh for your future exams. Summer internships, placement years. So graduate roles, definitely. I think as a firm, they tend to take on 3 to 4 each year. In terms of graduate roles, they have all normally been within the kind of business advisory and audit unit. I think there would be kind of consideration given to taking on a graduate in corporate finance. Obviously, if the right person came around, so I'm sure if you wanted to send a CV across when the time comes, that'd be fine. In terms of summer internships and placement years, again, yes. I'll flick back to this is the last question, so I'll flick back to my details here. If you are interested, then kind of drop me an email, let me know. We can see, kind of obviously working in the Manchester office, so coronavirus, everyone's working from home, but after that, kind of you'd obviously need to be getting into Manchester. But yeah, it is something that we have done in the past and we do kind of consider when we get applicants. So yeah, be in touch if that's of interest. So yeah, as I say, my details are there. If there's anything you want to ask on the back of that or anything that you think is unclear and you want to ask questions on, please let me know. And that's great. Thank you.